Hi, and welcome to Monthly Market Analysis with Abbie Shepherd, where we are here in the office rocking and rolling. We're back to school, back to real estate. Things are just hot, hot, hot in Atlanta, as you know. So let's chat a little bit. I want to talk about equity positions, housing market, number of sales, interest rates, all the good stuff, right? So I will tell you, you may be surprised to see that there are a lot more homes coming up on the market. Seems like the past month, there have been a lot of listings. I watch all the time. I'm excited to see some options that my buyers have. Well, we just in the last couple of weeks listed 9 homes. Of those 9 homes, 3 of them got multiple offers. 2 of them already have single offers on them. So it is rock and rolling. That market is moving, even with today's current interest rates. So I know a lot of people are hearing things on the news. Oh my goodness, we're going into a recession, housing prices are falling, that sort of thing. You know, the market really is hyper local. It can be different in different areas and price points. However, what we're seeing in Atlanta is a pretty steady market in terms of pricing, right? So we still have a housing shortage. And for those of you who are really going, oh goodness, are we going to see another crash like we did in 2008, 2010? And this is a very different scenario. For example, right now across the US, homeowners are sitting, 70% of homeowners are sitting 50% equity, right? So people have a very strong equity position. And 40% of homeowners right now own their homes outright. And actually, we're still continuing to get a lot of cash offers. So we are in a very strong equity position, completely different from where we were when people were underwater back in 2010. So very different. Now let's talk about interest rates, right? So that is having an impact on the number of buyers. Number of transactions this year are down about 50%. So what does that mean? It does not mean that the price of your house has gone down. It just means fewer homes on the market. We've talked a lot about sellers being less inclined to sell because of they're sitting on a 3% interest rate. Going into the market on a 6 or 7% interest rate is not that appealing. So less homes on the market too. Fewer inventory means price is still holding stable, even if we have fewer buyers, right? So interest rates. All right, we're at 7.5%. A lot of the lenders I'm speaking with are predicting 6 months, 9 months, and we should see some relief. We are still seeing sellers offering to do buy downs. A lot of lenders are offering to refinance when they come back down for free. So if you need to buy a home and you want to buy a home, we can definitely make that happen now, and you'll have some options in the future as well. We put it to you this way: if you're just considering getting in the market for the first time, trying to make a decision and having a little heartburn over the interest rates, well, if you think about it this way, right now, about $50,000 in car value is equivalent to about $200,000 in home value with today's current interest rates. So a lot of people that I see driving around some really nice cars that are financed, that is easily another $200,000 in home values that can be afforded. And now you have an asset versus just an expense. So some food for thought there. If you know anybody that's thinking about getting in the market, wants to build some wealth, have them give us a call. If you need to move, don't worry, we have loan options for you as well. And if you're just kind of curious on your equity position in your house, we can help out. Give us a call, Abbie Shepherd, 404-275-5561. Take care.